accounts in Alabama, a great nifty tool in the toolbox when it comes to disability planning. You've got not only disability planning, but some tax benefits, some care navigation benefits, public benefits eligibility, and even a clever way around the ISM rule for SSI, in-kind support and maintenance. ABLE accounts gives you kind of a clever workaround for that. So a lot in the toolbox. Let's do a quick overview in this video. So an ABLE account is that type of savings account. It's also called a 529A account that we talked about just a minute ago. It can get you a lot of benefits. The chief one probably being that the assets in that account, that little savings account, like that bank account, those are not going to be a countable resource. In other words, not going to be counted against you for purposes of SSI and Medicaid eligibility up to about $100,000. If you have $2,001 in a bank account, that's still the case for you, unfortunately. But if you put that excess dollar into an ABLE account, you can have up to $100K in there, and it's not a countable resource for purposes of Medicaid and SSI. Now, it's worth mentioning that there's also a contribution limit. You can only put in $19,000 per year into an ABLE account, and that is from all sources. This is something that trips people up. They often think, oh, well, mom, dad, grandma can all give $19K a year to this ABLE account, we be good. Unfortunately, that is not the way it works. It's $19K a year from all sources, and that's something that you got to pay attention to. Another important rule is that the beneficiary of an ABLE account must have been disabled by the age of 46. Now, this is a huge positive recent law change. It used to be 26, but on January 1st, 2026, that law changed to being disabled before the age of 46. Do I wish it was higher? Yes, I wish it was, until 65, so that you could just flow into Social Security at that point, or 67 it's gone up to. Unfortunately, it's 46, better than 26 with what we have, but you need to be aware of that rule. The next thing to note about ABLE accounts is that they can be broadly used. So the rule is, as long as funds from that account are used for what's called qualified disability expenses, those distributions are not income to the beneficiary, and there's no problem when it comes to SSI and Medicaid. Qualified disability expenses include things like food, housing, transportation, healthcare, job training, recreation, and things like that. So as long as you're within those parameters, you're operating your ABLE account properly. A big point of caution on ABLE accounts is that while they are great, they have what's called a Medicaid payback provision in them. We've talked about Medicaid payback provisions on this channel before, but here's what they are again. Medicaid payback provisions state that whatever's left in that account when the beneficiary dies, Medicaid gets first dibs to recoup from those assets left in there for the amount up to the amount that they spent on care for the beneficiary. So what that means is if you have $10K left in an ABLE account when the beneficiary dies, and the Alabama State Medicaid Agency spent $100K on that beneficiary's care during their lifetime, Alabama Medicaid gets first dibs at the $10K, and they will take it upon the death of the beneficiary. What does that mean? ABLE accounts are great. I love them. They are not great for large sums of money. First of all, you have the contribution limits that we talked about, the $19K a year. First of all, you have that, so it's not like you can just, plop $1 million in there and be done with it. But secondly, that Medicaid payback provision means when that beneficiary passes away, their siblings or whoever the remainder beneficiaries you want to be, if their siblings had to, you want the siblings to get something after the beneficiary passes away, maybe because the siblings, loved their brother or sister and devoted a lot of time to taking them to the doctor and things like that after you're gone. That's not going to be the case if Medicaid gets first dibs on those assets after the beneficiary passes away. So lots to think about here. The last thing I want to mention about ABLE accounts are that they are not a replacement for third-party supplemental needs trusts. They are a complement to third-party supplemental needs trusts. We often use both of them for our clients affected by disability. So they're a tool in the toolbox to use with third-party supplemental needs trusts. And I'll just give you just a little nugget here at the end. Third-party supplemental needs trusts, when drafted properly, do not have to have a Medicaid payback provision in them like ABLE accounts do. So that's all about ABLE accounts. Well, that's all I want to mention on this video regarding ABLE accounts. If there's something else you want to tell us about ABLE accounts, and my outline on them has a lot more than we went over on this video, drop it in the comment and we'll converse a little bit about them. Thanks for watching.